Welcome back to The Breakdown with me, NLW. It's a daily podcast on macro, Bitcoin, and the big picture power shifts remaking our world. The Breakdown is sponsored by Nexo.io, Arculus, and FTX, and produced and distributed by CoinDesk. What's going on, guys? It is Friday, April 1st, and there are no April Fool's jokes here on The Breakdown. We are all serious all the time. And today I am thrilled to be joined by Jill Gunter, returning guest to The Breakdown. But before that, if you're enjoying the show, please go subscribe to it, give it a rating, give it a review, or if you want to get deeper into the conversation, come join us on the Breakers Discord. You can find a link in the show notes or go to bit.ly/breakdownpod. Also a disclosure, as always, in addition to them being a sponsor of the show, I also work with FTX. Now, as I've mentioned, Jill Gunter is a frequent guest of The Breakdown. She's one of my favorite people to talk to about big picture power shifts. She was a former co-founder of the Open Money Initiative, which did research on how money was managed in places experiencing hyperinflation, capital controls, criminalization of free markets. She's a venture partner at Slow Ventures, so also has an investing perspective on crypto and technology more broadly. And finally, she's now a co-founder and chief strategy officer at Espresso Systems, which is looking at privacy and scalability in the context of crypto. We have a really wide-ranging conversation that extends from the geopolitical to the macro back to the crypto industry, and so I know you're going to enjoy it. And with no further ado, let's dive in. All right, Jill, welcome back to The Breakdown. It has been not that long, but it seems like a really, really long time.
Crypto years, it's like dog years, right?
Absolutely. Okay, so for people who aren't familiar, one of the things that makes you a constantly interesting conversationalist is that you kind of have a bunch of different intersections with crypto. You have a professional kind of investing lens that you come through, you have an operator builder lens that you come through, and you also have an impact kind of, global social impact type of lens that you think about these things from as well, which is inherently political in the sense of like thinking about big picture, power changes in the world as well. Give us a sense of sort of like what all you've been spending time on recently, just to kind of like level set how you're coming at the crypto space right now.
Yeah, no, thanks for that introduction, and setting the context for just who I am and kind of the lens that I bring to all of this. What I would say has been kind of the theme of my time spent in the world of cryptocurrency, which now dates back to 2013, which is crazy to think about. It's almost a decade here. I just keep coming back to this question of who is this for? What is it good for? What is the utility of all of this stuff that we as an industry are creating? And I'm very grateful that over the last couple of years, I think that utility has become more and more clear to a growing number of people. But for a very long time, what I kept coming back to in answer to that question was what brought me into the space initially. And just to tell that story very quickly, I started out my career on Wall Street, and I was in particular dealing with and trading situations in Argentina around a debt default and devaluation of their currency and capital controls. And then shortly thereafter, Venezuela, where there were some similar dynamics in terms of, again, capital controls and high rates of inflation, which led to hyperinflation. Both situations, people were using Bitcoin to get their money offshore. And that is a lens through which I come at the space in general. That is, again, the answer that I always keep coming back to in terms of the question of, okay, what do we know for a fact this is good for? And that has really informed a lot of the work that I've done in this space. And a lot of the work that I'm doing right now is very much around trying to unlock the appropriate options and sort of the right angles of utility in order to drive more and more mainstream adoption of hopefully all manner of use cases, but certainly, financial use cases at the outset. So happy to get into all of that and more. It's always a really amazing, invigorating conversation with you.
Yeah, listen, I think it's a sadly perhaps apt time to talk about crypto's use in challenging circumstances right now. But maybe before we get into that, let's talk about, I guess, your perception of. I want to kind of start narrow with crypto, and then we'll zoom out from there. But your perception of what's in the driver's seat right now when it comes to the crypto industry. How much of it is the crypto market cycle? How much of it is sort of a general macroeconomic cycle? How much of it is geopolitics? And the obvious answer is, well, it's a combination of both. But I'm interested in kind of your thinking about this.
Yeah, I mean, I think that those things is sort of three overlapping line graphs, if you will, or charts, and you can kind of sum them up in order to figure out the momentum around crypto specifically. And I think that what we've seen over the last few months, in particular, is that all of those line graphs have started moving in different directions from where they had been previously moving. And so if you take the geopolitics question, for a very long time, the big narratives around Bitcoin specifically, but crypto more broadly, did not feel super relevant to people certainly living in kind of the United States and the Western world and Northern Hemisphere, right? Where the big narratives around inflation and government asset seizure and all of these things that purportedly made Bitcoin sound money did not resonate with populations unless you were living in a place like, Venezuela or Iran or, Lebanon or North Korea or what have you. That's all changed with, of course, the Canadian asset seizures, with inflation ticking up across the Western world. Suddenly those narratives around Bitcoin have come to the fore in a way that they weren't previously for the last decade. Now, on the flip side of that, if you look at what's going on in the macro market, again, we've seen a big change in direction, but in this case, it's been a very different impact and had very different implications for Bitcoin and crypto, where, and this is perhaps ironic, but as inflation has ticked up, as the Fed and other central banks have started moving more hawkish and talking about and starting to deliver on major interest rate hikes and started to mop up a whole bunch of the liquidity that they've pumped into the financial system, really over almost the last decade at this point, that has, of course, created headwinds for crypto and even Bitcoin specifically. And so on those two fronts, we've seen this kind of collision of trends where on the one hand, Bitcoin and crypto has never been more relevant in terms of the utility that it can apparently offer to these more mainstream and moneyed populations of the West. And on the other hand, there have never been greater macroeconomic headwinds against them. And to answer your question, certainly right now, the macroeconomic headwinds are winning out. I think that that's pretty evident just in the depressed prices across crypto across the board, at least over the last 6 months or so, since things peaked out last November, October. And so I think that has been the dominating factor. And I think that to your third point around what the dynamics are around crypto as an emergent and nascent technology, I think that is going to be really what kind of tips the scales here in one direction or another over the next 6 months as to whether the improved narratives around the actual utility of all of this stuff can start to win out and beat back against the rate hikes and the headwinds on that front. So, maybe that is kind of the cop-out answer of all three matter, but I do think that the macroeconomic is the most important thing, at least over the last several months and will be probably for the next few as well.
Well, the thing that's interesting, I don't think it's a cop-out at all, but the thing that's interesting is whenever I ask that type of question, I always feel like it needs a time dimension. It needs to be like 4D, because if Bitcoin and crypto more broadly, but specifically Bitcoin, have matured into this asset that is in the portfolios of traditional market actors, both individuals and institutions, it is inherently going to be subject in the short term to its where it fits for those actors, right? It's going to be subject to the same forces, but that doesn't preclude it also behaving in the ways that sort of attracted people to it in the first place. And so to some extent, it may be more relevant to ask or just parse out is there anything that could interfere with the macro supremacy on this in the short term versus kind of on the flip side, is there anything that is either fundamentally reinforcing or fundamentally challenging the reasons that people are attracted to it over the long term? And so I guess more specifically, it's like, is Fed policy always going to be in the driver's seat in the short term from now on? But that doesn't necessarily impact whether people are getting more or less convicted about it as both an inflation hedge and also as a sort of censorship resistant store of value over the long term.
Yeah, no, I mean, I think that's exactly the right framing. And what tends to come to mind for me here is Ray Dalio's sort of framing of the, super cycles and then the cycles within the cycles and sort of the drivers of these things. He talks about this in the context of debt cycles, on the scale of countries and even globally. He talks about this in a lot of different ways. And I think that it's a very applicable framework to talk about crypto, where we can be talking on 6-month cycles, which are very sort of short-term cycles in the grand scheme of things. And very often we do talk in terms of those short-term cycles and what's driving them. And I think certainly the short-term cycles, and that was the answer that I gave you, the Fed and kind of the macroeconomic dynamics are driving them. But I think as I look at the bigger curves that are playing out, the bigger kind of sinusoidal curves that will play out, it comes back to the technology itself. And, as developments happen within the tech, what new use cases they can support and what utility it actually offers to people, right? Where, it's hard to draw perfect comparisons because I think, never before has a new asset class been so tightly tied to this new nascent emergent technology. But, if you look back at, I hate to go there, but the dot-com bubble, right, that burst based on a whole bunch of factors. And, it was, I think, 15 years or so before a lot of those stocks, even the ones that persisted, like Amazon, were trading back to the levels that they were at in 2000. But you have to, if you're looking at it on that more kind of macro 10-year time frame, then it's going to be very different things impacting it from, impacting the trajectories than just what the Federal Reserve is doing in the year 2022.
Super interesting. I remember the folks who were around in like 2018 and 2019 had a lot of time to ponder things because there just wasn't that much happening, like relative to obviously now. And I remember there being this great big discourse around money crypto versus tech crypto. And this is a way of trying to kind of resolve and understand how, in particular, it came down to like how Silicon Valley could have such a different perception of what crypto was useful for or interested in versus sort of like the Bitcoiners, right? To super essentialize the two sides of the conversation. And part of what I kind of just heard in that last answer that I think is interesting to peter us out is like, it may, as we learn and as it develops, be that it's sort of just the obliteration of those two things as separable categories. And it's maybe that might have interesting impacts on how it plays out, right? Like the dot-com bubble, ultimately, the share prices of technology stocks is largely separate from how they operate in people's lives. Whereas the numbers associated with crypto, it has a much more intrinsic kind of connection point, maybe not in terms of market prices, but in terms of the sort of like financial primitives. But I don't know, there's something interesting there.
Yeah, no, I think that's an important kind of dichotomy or framing to come back to is money crypto versus tech crypto. And I think that, it's imperfect in that there are ways in which these things overlap and collide in crypto in a way that, as I said, they don't, as you said as well, they don't in other areas. But I think that it remains a kind of powerful framing just to even understand what, different actors and parties' motivations are in the space and why different people can have such wildly different interpretations of what's going on out there, what's important to pay attention to, and all the rest of it.
Looking for ways to step up your crypto game? Then go with Nexo. For starters, you get free crypto for each purchase or swap. How about earning guaranteed yields? Up to 17% paid out daily. Ideal for you hardcore hodlers. You don't even need to sell. Instead, borrow instant cash against your assets. Get the most out of your crypto with Nexo at nexo.io. That's nexo.io. Meet Arculus, the next generation cold storage wallet. Arculus secures your crypto using 3-factor authentication, providing a simpler, safer, and smarter way to store, buy, swap, send, and receive crypto. Arculus is offline cold storage. Your private keys are encrypted on the Arculus keycard and are never online. Stay safe from hackers with no cords, no charging, no Bluetooth. Just crypto security made simple. Buy Arculus on Amazon today. The Breakdown is sponsored by FTX US. FTX US is the safe, regulated way to buy and sell Bitcoin and other digital assets, with up to 85% lower fees than competitors. There are no fixed minimum fees, no ACH transaction fees, and no withdrawal fees. One of the largest exchanges in the US, FTX US is also the only leading exchange that supports both Ethereum and Solana NFTs. When you trade NFTs on FTX, you pay no gas fees. Download the FTX app today and use referral code BREAKDOWN to support the show.
I want to kind of zoom out to the biggest lens, and then we'll start to come back in.
Yeah.
I'm interested in your take, your perception of these big think questions that are coming up in the wake of Russia's invasion of the Ukraine. And maybe to start, just bring us into what you've been observing, how you've been thinking, where you've been kind of drawn to ponder as it relates to the economic dimensions of this crisis, be it in terms of crypto or be it in terms of some of these larger questions of the reimagining of the financial world order. What have you been paying attention to or thinking about?
Oh gosh, there's so much to get into there. But, what I would say first and foremost, and this comes back to the lens through which I first got into crypto and the thing that I keep coming back to about crypto as, censorship resistant, cross-border kind of money that can serve as an escape hatch to people, be it in Venezuela or Argentina or indeed in Ukraine now. On the one hand, it has been just an incredible thing to observe. Obviously, the tens of millions of dollars flowing directly into Ukraine, to aid organizations, to the government, hearing anecdotal data about people being able to exit Ukraine with their wealth in hand, at least to some degree, and intact in the form of Bitcoin. These are really just incredible stories and data points. And I think, were the types of things that even just a few years ago still felt unimaginable or out of reach to those of us building in the industry. And that's been a really just powerful, again, thing to observe and in some ways get to be a small part of. On the flip side, of course, there is also this whole narrative that exists about the quote unquote bad guys being able to also use and access crypto in the same way, be it, Russian oligarchs or, some of the kind of like Elizabeth Warren style hand wringing about the Russian government, even using crypto as an alternative as they get hit with sanctions and so forth. And I think that for me, a big part of my thinking about all of this that has been informed both from academic research that I did years and years ago on Bitcoin in the context of capital controls and sanctions, also work that I did through the Open Money Initiative a few years back, which was a project that was researching how Bitcoin was being used in places that dealt with financial repression. Specifically, Venezuela was a main focus of ours. One of the key things that just arose time and again is that, yes, it is possible for, the big kind of powers that be, whether it's the Venezuelan government, where there's a lot of evidence that they were mining Bitcoin, or whether it's, Russian oligarchs, et cetera, using Bitcoin to get money offshore to protect their assets. these things are open permissionless tools. And to the extent that we want to say that these things are available to dissidents and refugees, then we also have to accept that they will be available for all to use, even those who make us a little bit, or in many cases, maybe a lot more uncomfortable in terms of thinking about their deriving utility from the things that we've created. But the thing that I want to highlight, and this was a huge theme of the research, the academic research that I did years ago on capital controls and sanctions, is that the powers that be, big governments, big institutions, wealthy, well-connected individuals, have always and will always have access to escape hatches for their wealth, for their country's assets. There have always been ways, be it through relationships with financial institutions in their own country and in other countries, privileged access to information and financial products, privileged access, again, to other countries' financial systems. Those escape hatches have always existed for those big, powerful players. And crypto, based on all of the evidence that I've seen, at least, is not the best option available to those types of actors. It's not a good option in terms of liquidity, in terms of the blanket transparency of it, all of these factors for the Russian government to use to evade sanctions. But it is a very powerful tool for those who are not in those more kind of privileged and institutional and powerful positions, to those who otherwise would not have access to any escape hatches or any tools of financial freedom. And that, to me, again, is playing out here as I look at Ukraine, Russia, and the dynamics around cryptocurrency. And that, I think, is a really important message that has often been missed as the mainstream media has painted with very broad brushstrokes.
It feels to me, I've had this sensation a couple times that it's almost too Goldilocks for like crypto rationalists to be willing to push this as hard as it seems yet. But it's sort of like the debate remains on, is it good for people who are in these situations, or is that outweighed by how good it is for the oligarchs and the power structures that are trying to be targeted? And it seems initially that it's like both and. If you're coming from the vantage point of Western policymakers who are focused on having sanctions go through, but who also love the idea of people being able to have tools to mitigate the worst of what they're going through now, that's sort of what we're seeing, where it's not like just the crypto community who's talking about this. Is the Treasury Department has been put in this weird position as crypto defender, where like 2 months ago we were at each other's throats for some rule or something, and they're the ones who are now conference after conference saying we see no evidence of sanctions. Of course, we got to keep checking it, but like right now, there's no evidence that there's wide scale or even small scale oligarch sanctions evasion or Russian sanctions evasion.
Exactly.
But you are hearing stories of, 20-year-old Ukrainian escapes with half their savings, on a ledger because they didn't have to stand in line at the ATM. And by the way, that ATM was only spitting out $33 equivalent by the time that people got there. And there's something pretty profound about that. I also think it's, whatever it ends up being, it will have left the realm of the theoretical.
Exactly.
And I think that the more the debates are had on the basis of like observable facts versus just, the sort of protagonists and the antagonists combating for what they think is right in a theoretical sense, probably the healthier it's going to be.
Yeah, I completely agree with that. And I think, it's important to be measured in this and acknowledge that we still have yet to see how all of the data shakes out here over the course of this war and this crisis that's happening. But that, at least as of yet, the data that we do have, there's obviously overwhelming data that crypto has been useful to Ukraine and their resistance and individuals within Ukraine, and even, some individuals within Russia, who are not perhaps the powers that be, but have been hurt as individuals, as families, etc., by the ruble crisis. Those anecdotes, and again, the hard and fast data that we do have around how crypto has been used by those types of parties far, far, far outweighs the lack of evidence, of course, that, as you rightly point out, even Treasury is saying, the dearth of evidence that there is around Russia using crypto in any kind of formal capacity.
I also want to say, it's like, I don't think this is really a misperception issue for this particular audience, but I want to make sure to be clear that, we're not being gleeful about the fact that there's now a live case study where we have to see these things play out.
Yeah.
Obviously it would be much better if we didn't have to, but I think most Bitcoiners live in the world of recognition that these things are reality, and perhaps being surprised, where and how and, why they happen, but recognizing that they happen. I want to move, though, to the sort of the even bigger picture side of the economics of the Russian invasion of Ukraine. What is your take on the whole discourse around the dollar? And by that, I mean not just sort of like Bitcoiners who are, kind of pointing out anytime that anyone says anything about Bitcoin, but also sort of the Zoltan Pozsar, Bretton Woods 3 thesis and all these sort of things, which are basically kind of, how much is this an inflection point in the system? And is it the direction that, FinTwit is saying that it's going in, or is it a very different direction, which other people argue that says it's, the dollar is really the only thing left. But I'm interested in your take there.
Yeah, I mean, I think that as an American, I would say that we as Bitcoiners, perhaps we as participants in the crypto industry, don't know how lucky we've been in many ways to have had the dollar. It's very easy to stand here and criticize it and throw stones at the dollar hegemonic system and all of the quite literal suffering that's caused over the years, globally. But I also think that in many ways, the dollar system, and again, I say this with full awareness of all of my privilege as an American, it's been stable and has offered us, a period of unprecedented growth globally, dating back to Bretton Woods, the original Bretton Woods. And I think that as we see now all of these threats coming about against the dollar, whether that's, the dynamics around Russia, whether that's the dynamics around China, importantly, whether that's the dynamics around, how oil gets priced, dynamics around the inflation issues and the Fed's attempts to hike and get that under control, get the value of the dollar under control, or whether indeed it's Bitcoin, the rise of cryptocurrency itself. I think that we would do well not to take for granted the benefits that we have all been able to enjoy based off of the dollar system, and kind of regardless of which direction things sort of pan out here over the coming decade or so. It leaves me with some trepidation, for sure, to think about the uncertainty of a world in which dollar hegemony is gone. But, on the flip side, it also leaves me with some degree of optimism that void could be filled with, something superior. But I think that the reality of these things, if you look at economic cycles going back through history, going back hundreds of years, there does tend to be one dominant global reserve currency that gets used for the price of goods that, everyone else is forced to maintain reserves of in their central banks, and so forth. And so, I think that it's more likely that, to the extent that we do move away from the dollar, and if I was forced to guess or to choose, I would say that trend is playing out. I think it's more likely that it ends up being, the renminbi that ends up just replacing it wholesale as that reserve currency, as opposed to some greater kind of compromise that comes about.
It's interesting. I find myself less sure around which direction I think it plays out. I think that it's very clear that there is new political risk associated with the dollar that perhaps wasn't on the table for people before based on this. It is not clear to me that that risk puts it anywhere near as the inherent political risk of aligning with the other available options. And so maybe the net of that is just that everything seems fucking risky, like it's just increased all monetary risk everywhere.
Yeah.
In which case that becomes a very interesting game theoretical thing that I have no idea how to predict and how it plays out. But I am a little bit uncomfortable with sort of the easy narratives of, not that you are posing one of these, but the easy narratives of like, oh, well, the US has gone after foreign exchange reserves, so no one's going to use the dollar anymore. I'm more compelled perhaps than I'd like to be by the like, yeah, but it's the cleanest dirty shirt argument, which has been the US dollar's argument for a very long time. It's just, or sure, it's even dirtier if it's still the cleanest.
Yeah. And I mean, to be clear, I don't necessarily think that those dynamics are going to be what precipitates a shift to, again, whether it's the RMB or anything else. I think it's more just sort of the shifting of global power dynamics on a geopolitical level in general. And I think that this is perhaps one small part of the story. But I like your uncertainty, Nathaniel, and I appreciate it. And I take it as optimism. So I'm going to roll with that.
I think it's been fascinating to see people have behaved in ways that are very different than how people thought actors would have behaved in this. One, the US actually deciding to be in a global leadership position in a way that's sort of assertive, I don't think is something that people anticipated, certainly not from the Biden administration. That's weird. The EU finding, at least so far, although it's being assailed now under the pressure of energy concerns, like actual common course. There's bad risk to that, obviously, like there's a lot of people who are looking warily at, remilitarization of Europe, but still it's not something that people expected. I think a lot of people expected China to go into Taiwan 25 minutes after this was announced. And obviously that hasn't played out. And I think that they're optimistic in the sense that like, these were kind of crude caricatures of how global power dynamics had evolved.
And the realities are much more subtle.
Yeah. And they're much more subtle. They're much more complex. And subtlety involves, I believe, a lot more room to negotiate and push for the things that one thinks are better or worse. If everything just plays out exactly as you think, then we're all just kind of along for fate's ride, right?
Yeah, no, I think that's right.
So I want to bring this back, sort of like my trail off from Ukraine and Russia back into the crypto world.
Yes.
You have spent a ton of time going back to exactly where you started this conversation, thinking about how these types of digital monies, cryptocurrencies interact with people's lived lives in the context of financial sovereignty, financial privacy, and sort of how they interact with money vis-a-vis the state and vis-a-vis sort of just their own kind of natural rights. You've been thinking a lot more specifically around just privacy in general and where it fits in crypto and the blockchain. How has what you've observed reinforced or shifted your thoughts on privacy as it relates to cryptocurrency or digital currencies? And what is the state of that? Where does that sit for you right now?
Yeah, no. So privacy has been, as you say, an enormous focus of mine. For years, really, dating back probably to the moment, I think back in 2013, when I first kind of realized like, oh, wait, Bitcoin is not actually private in the way that people think it is. And then that thread running through the work that I've done around the use of crypto in, the form of offering a tool for financial freedom and sovereignty to people. There's obviously a very strong thread of a need for privacy there. So many of the people that I spoke to in that context, as I was doing research around that theme, were not even aware, as I was not, again, in the beginning, that, all of their transactions are indeed transparent on this ledger. And, if their government cares to, which in many cases was the kind of adversarial actor in the situation, the government could, audit the blockchain, probably figure out, who was who and who was doing what and who was getting their money offshore to evade capital controls and all of these things. And that came as kind of a surprising and sometimes scary revelation to people. And then another experience that I have had in the cryptocurrency space that is coming from an entirely different direction is the work that I've done with big sort of Wall Street institutions, even kind of central banking institutions, in terms of understanding what their needs would be were they to adopt either sort of like permissioned blockchains in days gone by, or to adopt cryptocurrency, as a product that is integrated into their processes that they use. And there again, privacy crops up as one of the first concerns, where big institutions like that need to understand who their counterparties are. They need to know their customers, all of these kind of regulatory and compliance considerations that we in the crypto space all know and love, or sometimes hate, but regardless, we're familiar with them. And then on the flip side, though, they also need to be very concerned about their own data, right? They need to be very concerned about the leaking of their data to competitors, to adversarial actors, the leaking of customer data. And so across kind of both ends of the spectrum, ranging from individual sort of dissidents and those types of parties using crypto, ranging all the way up to, ironically enough, like governments and central banks exploring this technology, privacy has always been a theme that has cropped up in my line of work. And a recurring element of that theme is that the options that exist today, or have, up until very recently existed within crypto, have tended to be quite black and white. If you're using a privacy-oriented coin or blockchain, you are giving up and forsaking all of the benefits of transparency that you can get from crypto. And if you are using a transparent chain like Ethereum or Bitcoin, of course, then you are forsaking any claim that you might want to have on your privacy. And so a big theme of my work over the last couple of years has been exploring how people actually approach privacy and think about privacy, and the fact that users don't actually think of it in these black and white terms. They think of it as just, well, what do I want to keep private and from whom and under what circumstances? And so do big entities. And that's a big part of what I've been working on again with the company that we just launched a few weeks ago, Espresso Systems.
So let's dig into that, because I've seen you push back on a post about CBDCs and privacy around these specific themes. So let's talk about what this sort of gray vision of privacy is, let's call it, or consumer-oriented vision of privacy is.
Technicolor vision.
Technicolor. There you go. That's a better way of putting it. Yeah.
The branding marketing person in me. Yeah. So, I mean, the post that you're referencing, I think is actually a good framing for this and a good place to start, where this has happened several times now, where a central banker will get up on stage at, some conference or, in the form of making some announcement about how they're approaching cryptocurrency now. And they will share something that I think to many people in the crypto space feels oxymoronic. And what they'll be saying, and this is sort of Western EU, ECB, or else the Fed types of central banks saying this, just for context. They'll be saying one of the most important things as we explore CBDC is that we respect users' privacy and users' right to have private financial transactions. On the flip side, we as the central bank will also need to optimize in our design of any CBDC for having appropriate controls and appropriate auditability and insights into what is going on with this central bank digital currency that we issue. And again, that can feel, upon first glance, like it doesn't make any sense. Like those two things just completely butt heads against each other. How can you be guaranteeing users' privacy while also maintaining insights and control over what users are doing? But the reality is that for the majority of users, and the ECB actually the European Central Bank actually put out an amazing report on this about a year and a half ago, where they went to users, potential users, right? So they went to their stakeholders and the population at large, and they ran surveys about what users care about. And those two things came out as two of the things that users themselves cared about, where for the majority of users in their study, in the ECB's study, they found that users cared about their privacy in general from the general population. They didn't want their neighbor to be able to go in and see what their income was, or, their friend from work to go and be able to see what their mortgage payment was or whatever. But they were okay with, and in fact, in many cases wanted, their importantly, trusted, democratically elected, whatever government, to be able to have insights and controls into what's going on. And that I just think speaks to the fact that for most people, and this again feels foreign and uncomfortable perhaps to those of us with kind of a libertarian bent within the cryptocurrency ecosystem, but it does speak to the nuance with which users tend to think about their privacy. And I think that is going to be an increasingly important thing to capture for all manner of users. And importantly, I think that it just is a matter of opening up the spectrum of possibility and the spectrum of options for users. And I said this in the tweets that you were referencing. I would not be comfortable in a world in which a CBDC, where governments have full auditability and full controls over transactions, where that was my only option. I think that fully anonymous cash in the form that it exists as paper money should exist. I think that Monero should exist. I think all of these things should exist. But I think it's okay as well if a prevailing option that exists out there that users are comfortable with is something like what I just described.
What are the knobs that you think can be toggled when it comes to cryptocurrencies? Where do cryptocurrencies fit inside let's say that there's a privacy respecting CBDC regime, and let's hold aside for the sake of discourse the, governments can't be trusted anyways line of thinking, which is sort of a prerequisite, disinclination towards CBDCs. Where do cryptos or privacy oriented cryptocurrencies fit in that? Where are they in that spectrum, I guess?
Yeah. So, I think that there are a lot of different ways that this could all play out, and a lot of different options available depending on kind of what is suitable for the society that we're talking about. But I think that, I think that there are different approaches that, for example, central banks, and this does not obviously have to be limited to central banks, it could be any asset issuer, can take with regards to privacy, where using the magic of zero knowledge proofs, right, which enable you to prove certain things are true about the underlying data without revealing the underlying data itself. There are all kinds of incredible applications that you can think of with regards to that, where, I could imagine on one end of the spectrum, central banks or other parties getting comfortable issuing fully private assets, given that those already exist, again, as central bank assets in the form of paper cash today. I could imagine a world in which, there is enhanced data privacy for people relative to what they get within the banking system, the kind of digital and online banking system as it exists today in the West, wherein you could imagine banks interacting with whether it's a CBDC or a bank issued note or, some other type of cryptocurrency, and only being permissioned to view what's going on in transactions that are above a certain threshold. This kind of aligns with like the travel rule guidance, if you're familiar with what FATF put out. And then you could also imagine all manner of, again, other use cases where, for example, I might be able to prove certain things about my credit score. I might be able to prove that my credit score, if it were to be attested by the big parties that be on chain, I would be able to prove it's above a certain threshold without having to disclose all of the underlying information, to a landlord or a lender or what have you. Just a lot of really incredible, again, just options that I think suddenly become available that do go a long way towards protecting user data, even if it is not the kind of maximalist, all private, everything from everyone all the time privacy approach that some of the OG cypherpunks who I know and love would advocate.
So do you see a lot of this Technicolor space as the way you just described is basically sort of like a zero knowledge proof of, my credit score is X, but you don't need to know my exact credit score. You just need to know it's in this range. And there are ways to do that without actually revealing what that credit score is, but not with having complete privacy around that credit score kind of a thing.
Exactly. And, again, I think that there are many different ways in which this can be applied to assets, to applications. And I think that, the exciting thing to me is that there's been tremendous validation, again, even just over the course of my career in crypto, that this is a thing that people care about, that institutions care about. And yet it's not a space where to date we have been able to see a whole lot of innovation. There are obviously a multitude of companies out there that are actively working on privacy. And then there are kind of the early pioneers of Zcash and Monero, but we haven't seen the sort of explosion of innovation that we have, for example, within the Ethereum ecosystem around what I think is a fundamentally new knob to turn, as you put it, around what things are private and public and transparent to whom and under what circumstances.
How much is this a technological challenge versus a political challenge?
Yeah, I think it's a great question. I think it could be framed as a political challenge, just in the sense that privacy is always contentious. And I think that the fact that people do tend to talk about privacy, as I'm doing right now, in kind of the blanket term of privacy, can feel immediately scary or threatening to, be it policymakers or what have you. But I don't actually view a lot of this as inherently politically challenging. And I think a lot of that comes down to kind of the framing of things where, a lot of the regs and laws that exist out there protect users' privacy, right? Certainly we've seen this in the EU. I think that we see it more and more in the United States, where, a lot of the burdensome regulations on companies are about data protection. And I think that has also been a challenge to those who want to adopt cryptocurrency. It's not just kind of the other way around. I think that the biggest challenge, certainly there are very serious technical challenges, but I think that one of the biggest challenges that I would highlight is just how devilishly tricky privacy can be to reason about as a builder, as a product designer, as someone, creating new applications of these things. It can be very, very challenging to make sure that you're capturing privacy in the right way, in the way that people care about. And I think that a great example of this, both good and bad, perhaps, was evidenced with Facebook, where Facebook rolled out all of these kind of variable user controls, right, over who gets to see what data and what data gets shared on your timeline with other users, and you can really fine tune it and so forth. And I think on the one hand, they did an excellent job of enabling users to take control of their privacy in that way, but they missed one big thing, which was not just how users get to control how their data is shared publicly on their timeline on Facebook, but also with whom Facebook was then sharing their data. And I think that that's a really great example of how we talk about privacy in these very blanket terms, when in reality, privacy is going to mean something very different depending on who you are, how you're coming at it, where it turned out a lot of people misinterpreted, Facebook's quote unquote privacy guarantees to believe that Facebook would never share their data with third parties and so forth. And again, you talk to a political dissident versus big company, and they're also going to have very different views of what privacy means. And that's where I think configurable privacy becomes important, but just the trickiness of designing applications in the right way for the right users will become evident as well.
Absolutely. It feels to me like there's a reckoning coming for this on a national conversational level. We have a type of money in cash that is inherently privacy preserving.
Right.
And there is a big part of me that feels like the way that conversation plays out when people say, yeah, but you should be able to have private money, and pointing to cash is not, oh yeah, you're right, cash already has that principle. It's like, that was a historical accident. We never should have had that.
Right. Can you imagine if someone proposed cash today in Congress?
Yeah, it's insane. It would be insane.
Yeah.
Which is, I mean, that's the fascinating thing. All right, so I wanna get to wrapping up, but I have to ask a question to throw back to a podcast that you used to do. You obviously look at a lot of other parts of the crypto industry as well. What's grinding your gears right now?
What is grinding my gears? Oh my gosh. I have to say something that is grinding my gears. And thank you for the podcast shout out. I miss my days of being on the microphone with Meltem. But I would say that something that's grinding my gears right now that we haven't touched on at all here is just the state of the growth hacks that have come about as a result of, I think, the rise of NFTs and various NFT projects trying to gain traction around themselves. And also as a result of probably like DeFi airdrops and kind of the yield farming and so forth of the last couple of years, which is that as a builder now, as someone who is back on the building side, trying to ship and build products that matter to people and an underlying protocol for them, it is nigh on impossible to get good signal amidst the noise of, for example, a Discord channel or a Twitter account and so forth of what is really resonating with people. Thanks to the fact that so many of these projects that I was alluding to have been rewarding people over the last couple of years for just dropping into their Discord channel and saying GM or, making a meme or what have you. And don't get me wrong, I love the sort of pleasantries that exist within the greater crypto Web3 ecosystem. But I also think that it has really muddied the waters in terms of being able to derive signal from noise for those of us trying to find, the market for what we're building.
Yeah. Listen, I say this as someone who has lost listeners because they didn't just instantly condemn NFTs for some purity test. And as someone who believes very strongly that there are both super interesting things about NFTs and that even the worst of them are radically less pernicious than the worst of the ICOs. But it's hard not to be reminded of when investors asked with a straight face, how many people are in your Telegram?
Right.
When they were thinking
these
about
vanity
ICOs.
metrics, right?
Yeah. No, there's definitely a lot of that. You had a great tweet about this. You said airdrops and whitelists based on low-hanging contributions, like saying GM in a Discord or mass meme creation, have shot to hell existing models around community development and engagement. Crypto needs to completely rethink what community can look like.
That's the challenge. That's the opportunity.
All right. Well, we'll check back in a few months to see how we're doing on that front. But for now, Jill, thank you always for your time, for coming on, for sharing your insights, and glad to see that you're back building and excited to see what you guys do with it.
Thanks so much.
I want to hone in on this point about privacy and whether it's a more technological or political challenge going forward. And Jill articulated a lot of the ways in which technology creates more nuance, more technicolor between black and white, as she put it, in how we think about privacy or not. I think that's incredibly powerful, but it's also inherently, I think, political. In many ways, it feels to me like it opens the political surface area to have the discussion about how privacy is or isn't going to be built in to the systems we create for the future. I do think, as I mentioned in the show, that there is a big political discourse coming around the nature of privacy and money specifically. We're already seeing previews of it in the crypto industry. We're certainly seeing it in the early conversations around central bank digital currencies. One of the things that's going to be powerful is that it will not just be the cryptocurrency industry allied as a block. I think there's going to be a lot of different takes about where privacy fits even within this. It is clearly one of the most significant parts of the discussion of central bank digital currencies, and in particular a digital dollar. My base case continues to be that the upshot and efficiency of a digital dollar is going to make it impossible for the US government to resist. And that's to say nothing of the actual benefits, which I'm not even factoring for here. Given that, I hope that many of you will participate in the national conversation that I am anticipating around the nature and design of that CBDC. And for what it's worth, that could mean fighting against it before it becomes a foregone conclusion. Whatever the case, it was great to have Jill on the show, and I'm excited to bring her back to catch up on all of these topics in the months to come. I want to say thanks again to my sponsors, Nexo.io, Arculus, and FTX, and thanks to you guys for listening. Until tomorrow, be safe and take care of each other. Peace. Hey, Breakdown listeners, come join CoinDesk's Consensus 2022, the festival for the decentralized world, this June 9th through the 12th in Austin, Texas. This is the only festival showcasing and celebrating all sides of blockchain, crypto ecosystems, Web3, and the metaverse, and is designed for crypto newbies, investors, entrepreneurs, developers, and creators. Don't miss speakers like Cathie Wood, SBF, CZ, Punk6529, and Joe Lubin, to name just a few. Use code BREAKDOWN to get 15% off your pass at coindesk.com/consensus2022.